morning, good evening, good afternoon, whatever time it is that you are watching it. It is July 9, Sunday, just around 10 a.m. Putting together for you your weekend video as we go into the week ending July 14th with a view a lot more condensed than what last week was for what we've been through and where we look like we're heading to. And Friday, ba-bang. Posted there in the alert room at 1:07, right after Elongate posted his message. I had to go put that email together, so wasn't really spending too much time there. It was the end of the week anyway. On Elongate sharing there 6 minutes prior. Got in the July 14th 438 puts at $1.12. So I sent out the email that, it is the shopping alarm. Time to go shopping. July 14th or July 21. And giving you the wider view, looking on the SPX, and obviously earnings season kicking off this week, July 14th, JP Morgan. The week after, I believe, I'm not 100% sure, but I believe all that we get is Netflix and Tesla. We don't get any of the other big names until the final week of the month. But yeah, your Elongate following on the 438 puts, $1.12. They dropped down to 99 cents, right around 145. Closed at 226, up 100% from where he got in. And we still got a week on these. But yeah, Friday worked out great on a lotto. Again, when we talk about lottos, the term lotto is used because it is a zero DTE. And because it is a zero DTE, you don't want to be placing a large trade on this. So yeah, if you threw $350 at the trade, closed out the day $3,650. So you made, right there, $3,300 on one contract at $350, 900%. End of the day, bang, bang, bang. And more importantly, what everybody noticed, we closed on the lows of the day. Now, we didn't take out Thursday's low, where Thursday we finally got our minus 1% day. 27 trading sessions without one, and we finally got one on Thursday. And we wound up closing fractionally above that minus 1% level, 44.02. We didn't take out that 43.85, but we did close on the lows on Friday. So with a big asterisk next to it, the term markets don't bottom on Fridays is in play for Monday. Monday, we should be looking at a little bit more downside. And on Monday, coming in here first, looking at the Bible being the 4-hour index charts, we are not oversold on any. We are not oversold on the NASDAQ. We are not oversold on the SPX. We are not oversold on the Dow Jones, which is getting very close to hitting that 50-day moving average. Just a couple hundred points lower. Dow Jones already well under the 5-day, 20-day, 10-day, going to be making contact with that 50-day moving average with just about 100 points to the downside. SPX very clearly holding above the 20-day moving average, as well as the NASDAQ, well off of that 50-day moving average down here at 42.50. So yeah, going into this week, again, being very condensed about this view, really want to focus on the VIX, because last week was the very first time in well over a month that we had a VIX uprising. One of the things that you want to look at in your spare time is the term Volmageddon, because there's a lot of discussion about this coming out on how prior Volmageddons have taken place. Back in 2015, the yuan devalued back there in August. 4 days, SPX was down 11%, 11.8%. Back in February 2018, just hit that high over there in January. It was getting very, very easy to sell volatility, sell puts. 3 days, 4 days, doubled. 1 day, the VIX doubled. In 1 day, the VIX doubled. Took us 3 days, 4 days total. We had a 12% drop on the SPX. So what we looked at here last week, even though we do have those gaps, we had the gap from the 4th of July weekend. We almost filled that second gap. We did fill the third gap over here that was created here on Thursday night. We did fill that on Friday. We do have a nice elevated VIX above that 1451. Come out here onto a wider point of view, which I've shown you before. 1451 was where we were at the FOMC meeting. This is where we fell off at the very beginning of the month in June. We do have gaps real time. Real time, we have gaps. This is the only gap that was never filled pre-market, post-market. This one up here above 17. And bring you into that wider view. This is that long-term support line over here coming back from 2019 where it is still up above that 1750 area. So doing a basic Elliott or Fibonacci extension drive from what we're working with right now, VIX having closed and supported above the 5-day, 10-day, 20-day on that dip that it took there on Friday, could possibly be looking at that move back up into the 17s, maybe even up there into that 21, where from a wide point of view, you can see where that 21 has been resistance going all the way back here since we fell out from March. So it's definitely there to be made aware of, but we're still being very nimble with what we're looking with because we have CPI coming out here on Wednesday. Earnings begin with JP Morgan and the banks at the end of the week. Next week is OPEX and only a couple of major names, Netflix, I'm pretty sure it's Tesla. And then the last week of the month, the last week of July, you've got a large number of your heavyweight Magnificent Seven reporting. And we have the FOMC meeting. And we're heading into the full moon. So there's still a lot of maybes and ifs. And to make that clear, the first breath of life that, yes, we may actually be getting the dip that we've been looking for quite some time, would be a break here of this 43.88, 43.84, last week's lows, and start to make pressure down on that 43.35 that we haven't been able to break down below ever since way back here in the middle of June when we went into OPEX week. So 43.85 is primary. 43.65 has been a big problem, had been all the week prior, even the week prior to that. And then 43.36, 43.30. If we can see a move that makes us down here into this level, then we can start being a lot more confident that either A, you are playing this ride to the downside for this long-awaited dip, possible Volmageddon small occurrence, or patiently waiting for us to get that nice little dip down, get a little bit of a oversold reading, and then we can start to get aggressively long as we start going into the summer months. Come over here onto the NASDAQ, looking at the NASDAQ from a wide point of view from a weekly, extreme overbought. As overbought as we were heading into COVID. Extreme overbought, and you've already seen this starting to take the move to the downside. This is on the weekly. Now, come out here on the weekly, and yes, again, with this wave 3, how this wave 3 appears to have looked from the 1, 2, and this being the 3, fits out perfectly coming to the 161, coming right over there to the March highs, and a dip down no lower than around that 13,500 or the 500 or the 50-day moving average would be a nice corrective dip, roughly around 10% over there on the NASDAQ. And then we can start getting a little bit of a move that we can be a little bit more aggressive to the upside as we go into the summer months. QQQ, again, being that we are already positioned and having alerted out the trades for next week for July 14th, no gaps to the upside. We filled it perfectly over there on Friday. We have this one gap here to the downside, which came on Thursday. We have the other gap, which is from early last week, going over here to that low, 357.59. Should we get that ability to take out those gaps, the big gap from over here in June lays down here well below 336, 331. That would be like the greatest you could expect if we do get a fake AI Q2 earnings report, would be a dip down here into this level. So that's really what we're looking at right now. And 1 second here. Hold on. Excuse me. Had to do that. Coming on to the SPX and looking back at how we had that massive OPEX week, green, 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 Monday, Tuesday, Wednesday, Thursday. No other OPEX had ever done that. Closed red on Friday. We were in that trade for that closed red on Friday. Also happened to be when we went greater than 20% year over year on the SPX. First time that we had done that. Since OPEX week, okay, all that we've been doing is gapping down every night. Gap down, gap down, gap down, gap down. That one gap up over here on June 27th, and we had that big rally day. Can't remember from the top of my brain what was going on that day. But yeah, broke out of the range of this 30, 25 stuff. Had your big move. Had your green Thursday, then had your big Friday at the end of the month there on June 30th. When a lot of people were expecting that there was going to be a sell-off because of the way that a lot of these NASDAQ stocks ran as they came off of those lows going into the beginning of the year. Last week, short week, half day on Monday, 14-point range. Tuesday, horrific, 17-point range, but we've got 3 red closes in a row. Now, the red closes aren't as important as the green closes as long as they're not red every single day of the week. You won't get red every day of the week. But yeah, gap downs are continuing. We did get a little bit better range on Friday, even though it was only 43 points. We did get a red week. So with the full moon and how everything is expected to be plotting into this, that minus 1% move was a great visit. We need to see some follow through, and we need to see some follow through rather expeditiously. So we got CPI coming out on Wednesday. If we were to get a move deeper into the downside, again, having to have respect for our 4-hour chart, we should be getting a pretty oversold reading as we get into one of the days this week. If not Monday, Tuesday. Taco Tuesday would be a perfect fit. But again, that's what we're looking at from that oversold point of view. Trades last week, everything worked out great. Had your 20% there on Monday, 67, 75, and Fridays 44.20, 44.15 went greater than that $2 that was mentioned in the alert as we had that run up at the end of the day, and then the crash down to close on the lows of the day down there below 4,400. So Volmageddon, what we talk about is like here in August. This is going back to 2014, 2015. 2014, 2015 was very, blasé. 2015 specifically. We kept coming up to that 2134. We would never take it out. We were always holding right there around 2100. Very, very tight range for a long period of time during 2015. It was so easy to sell volatility, so easy, so easy. And then all of a sudden here in August, China devalued the yuan. In today's world, we've got all the talk about BRICS, how they're getting away from the US dollar, all of those OPEC countries. And bam, an 11% drop, very, very quick, took 4 days, boom, boom, boom. Then you got your bounce, then you got your revisit to your bottom, and then your spike back up, not taking out those highs as we went in here to November. This was your very first rate increase since 2007, right over here in December with Janet Yellen. And then again, the same thing with Volmageddon, how volatility was so easy to sell. Just sell puts, just sell puts, just sell puts on the indexes, on the stocks. Oil wound up crashing down to $25. And here was your big sell-off down here, down 12, 13% into February 2016. Had your run up coming back up to that 2134, and then you had Brexit. And after Brexit, you had that energy where immediately you took off. We had a great jobs report, and we went up here to this Obama high, which is 2193.81. Go look at where the bottom was for for COVID. You went right to Obama's high. Had your fade off, here was 999 right there in the middle. That big gap down that you see there, that was 999. And then your fade down into the elections, and the elections took off. Don't have your chart here for 2018, but that's basically the same thing that happened. Is volatility went absolutely nowhere all through 2017. It was an easy trade. All you had to do was sell puts on the indexes, on the stocks, sell volatility. Wasn't going to go anywhere. And then after January 2018, that's when we had that fall off. Quick 6-session, 5-session, 8-session, however many sessions it was, 12% drop down there onto February 9th. And we actually broke one of the VIX products. A lot of people remember some trading platforms were actually frozen and you couldn't even access them. So here we are, right? So here was our big drop from our March highs over here on the VIX, where we spiked up to 3081 when we hit that 3809 on the SPX. All we've been doing is cruising down, oversold weekly, cruising down, little bit of a bounce, really quick to buy back, overbought, drop down, drop down, drop down. This is on your daily we're looking at here. And here we are again after this curl up from where we've come. I've shown you the picture here of this inverted head and shoulders. We come right back up to 1706, which is your February lows, the lows that we had, the longest period of lows going all through 2022. And here we are overbought. Overbought over here on the daily, exactly as we were overbought over here on the daily back in May. Same visits like we had over here on our spikes. So we're not taking anything for granted as we go into the beginning of this month or the second week of this month. What we will definitely come out here and mention, because it has happened now 3 times, this could be a fourth. This was our full moon, and we knew it was our full moon being the bottom. Here was our full moon in April, and it wound up being the bottom, not a top. Here was our full moon in May, wound up being the bottom, not a top, even though we had just come off of it right there. Here was our full moon in June. Again, a bottom, not a top, even though our top was right here as we hit that 42.31. Then we gapped up and have that 20-point gap. Here's our full moon right now. So we really, really, to have confidence in this, we really want to see that break down below 43.85. 43.85 breaks, we want to see 43.65. 43.65, we want to see 43.30. We get 43.30, we know that we are on a steamroll down into that 41.85, 41.65 area. As long as we don't break down below 41.55, this should be nothing but the bullish dip that we've been looking for, so that we can buy in to be able to go up into the 45, 4700s as we go into the latter part of the year. So enjoy your weekend. I hope that this was a short enough weekend update. We'll see what we get as we go into the beginning of the week. Biden farted live on hot mic. Biden sniffing girls while they're recording them on video saying, "Don't tell your mommy." Biden giving cluster bombs to Ukraine, which are banned by 100 countries around the world and considered a war crime. And Donald Trump shows up at the UFC, handshaking everybody. You got to love the world that you live in. Have a great weekend. See you guys in